Guys, good morning. It is 1 minute past 8 on Tuesday, the 30th of April 2024. That means that we've completed 2 years, and this is the week 4 of the third year in what will be roughly an 8 year financial independence experiment. You are very welcome along. Now, I was looking at the indicators on the screen just before the market opened. So I can tell that it has just opened. My apologies, I didn't manage to start 30 seconds earlier, or you would have seen this indicator just above the sell button. You would have seen that flip from red for yesterday. I think yesterday we ended up with a fall of just over 0.5%, if I remember rightly. This thing here for yesterday, well, I think it hasn't updated yet. Basically, yesterday's open was 2927, or sorry, 77.2927. As far as I can tell, that hasn't updated for today's open. Still not enamored with this view of things, but it is what we've got to work with. Just a quick reminder that if you are interested in getting the free shares offer, the current campaign runs out, well, basically today. I had a look at it just before going live there, and there are about 15 hours remaining. So if you do want to take advantage of that free shares offer, you would get up to £100 worth of shares. If you have already done your research, if you have decided that investing is something you want to be involved in, if you were going to be opening an account anyway, then please consider using the affiliate link in the description for the video, because that would benefit me as well. On the other hand, if you do not really understand investing, if you're not sure that it's the right thing for you, if you're not sure what you would invest in or how you would invest, for what time frame, if you don't appreciate the risks, if you don't realize that you could get back less than you actually invest, then please stay well away from the affiliate link and don't touch it with a barge pole until at least you have a better understanding of what it's all about and really know what you are getting into potentially. With that warning, guys, let me go ahead and put in our weekly £120 worth of theoretical money here into the S&P 500. Theoretical only because I don't want to share my personal financial details with the World Wide Web. But I am an investor as well. I am 47 currently. I plan to retire early at 57, and I think I'm more or less on track to be able to achieve that. So our £120 is going to buy us 1.5 shares roughly. I think I maybe said that already. This is a market buy, so it'll just execute at whatever the sort of closest fair price is. So we got 1.55 shares as expected, for £77.35, and that has gone through. The figures have updated here to show that the portfolio value now is just shy of 15,500, and our return on investment is currently sitting at just over, well, it's near enough 17.75%. and you can actually see visually, you can sort of see that represented. So the blue line here represents the average purchase price, which is currently sitting at 65.70 near enough, and the current market value is up here. That's the dotted line, and as you can see, it's marked over here 77.33. So the gap in between those two, multiplied by the number of shares held, which is currently just under 200, gives us our basically our profit, I suppose, or loss, obviously, if the lines were round the other way. If the market had dipped below the average purchase price, then that would be still a return, but it would be a negative return on investment, and instead of being in green, these figures would be in red. On this platform, at least. Other platforms may display things differently. So let me just see. Actually, I didn't notice if there were any notifications this week. But then again, it all depends on knowing where you're looking. Right, there's the little bell at the top right. You'd hardly see that with the little blue dot on it, but anyway, that's that's where they show up, or at least where they did in the past. So there's our pardon me. So there's our purchase that's just gone through 2 minutes ago. Biggest stocks before earnings, we have Coca-Cola, McDonald's, PayPal, Archer Daniels Midland, 3M, Eli Lilly, and Co. And actually, of those, the only one that I can say that I don't recognise is Archer Daniels Midland. Eli Lilly and Co. is probably the other one that a lot of people may not have heard of. My understanding is that they are basically a pharmacy company, something probably akin to Boots. That's my understanding. It could be wrong, but that's to the best of my knowledge. So further below that, Apple up 3.5% on a Bernstein outperform rating ahead of earnings release. So that could be correct. Tesla wins approval. Tesla up 9% as Musk secures self-driving approval in China after surprise visit. Pardon me. So that's interesting. I suppose despite the Western prejudicial view of the Chinese, they do appear to be people who are passionate about technology, passionate about everything that has to do with improvements, I suppose, in society, and theoretically, self-driving vehicles are going to be a lot less prone to errors, let's say, than human drivers. So not really much of a surprise from that point of view that they are giving Tesla approval for self-driving vehicles. I suppose you might have expected them to act the way the Americans probably would have, and refuse permission for Tesla to have self-driving vehicles, and rather wait until their own companies were at the same sort of level of development or something like that. But from the little I have seen and the sort of skeptical view I've been taking of stuff that's been put into the mainstream, my understanding is that the Chinese are a lot less. I'm going to use a term you've probably never heard before. It's one I've just invented. They're a lot less Western hesitant than Western politicians like to make out. So other notifications here. PHIA, apparently that's Philips. Don't know if it's the electrical manufacturer or something else. Actually, well, yes, that logo looks like one I have seen on radios in the past. So Philips up 34% on lower than expected 1.1 billion US recall settlement. That's a big rise, and I'm not sure what I vaguely remember there was something going back about Philips, and I think it was ventilators that had been manufactured in a rush for COVID, but I don't recall whether they were basically being sued for something to do with the thing being not fit for purpose or words to that effect. But obviously that must have hit them pretty hard for them to be back up 34%. That suggests to me that they had probably lost most of that previously. Right, and then the other information we have is there's holidays upcoming, so the first weeks of May. Let me just open this a little bit bigger because otherwise we'll not get all the detail. So 1st of May, all European markets except for London will be closed due to Labour Day. I think here sometimes we call it May Day, but same thing. The 6th of May, London Stock Exchange closed due to the early May bank holiday. Then the 9th of May, the Swiss Exchange closed due to Ascension Day. The 20th of May, Toronto Stock Exchange closed for Victoria Day. And finally, also the 20th, the Swiss Exchange closed, but for Pentecost. So quite a number of bank and other holidays upcoming. It's a busy month for stock market closures, and as you can see now, it's interesting actually just to see that they say all European markets except for London Stock Exchange closed on the 1st. It's just interesting because if you have companies that span different parts of the globe and trade in different markets, sometimes what you might see happen is, let's say if you've got a branch of a company, I can't think on a good one off the top of my head, but let's say you've got another company and they have a branch in the United States. They also have a branch in Singapore, and another I don't know, in China or something like that. So hypothetically speaking, something could happen just after the American market closes for the day, and whilst the market is open in, or just as the market is opening in Singapore or something like that, and so you could find that the price that the American market closed at is kind of a bit high, but the other markets begin to reflect whatever has happened, whatever the news is basically, and then if you've got a bank holiday or something like that, or a closure day, it can take a while for whichever markets are not operating to catch up. And that's basically the thing that kind of goes through my head whenever I see a list of holidays like that. It's the sort of thing that makes day traders sweat, I would imagine. Not the likes of us, I have to say, because we know that the right thing, the best way to invest is to do it consistently, to always invest no matter what is happening elsewhere, and that way, even if the market falls, you're going to take advantage of dollar cost averaging, and in the long run, everything should smooth out. And if the market does do what it has done and what it's expected to continue to do, or at least index funds anyway, you should see over time a gradual rise in your favor. So guys, with all that said, that's going to be it for today. Thank you for watching. If you find the content interesting, why not subscribe to the channel? If you particularly liked this video, give it a thumbs up, and I will be back with more sometime next week. Thanks for watching, and have a great end to your Tuesday.